Hello, good afternoon, investor and corporate. Welcome to Set Digital Roadshow First Quarter 2022 Performance Review. This section will run about 45 minutes, including Q&A. Company will start the section by 30 minutes presentation, followed by 15 minutes Q&A. And during Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite PTT Exploration and Production Public Company Limited to start the presentation, please. Thank you very much.
Thank you, Ka. First of all, on behalf of PTTEP, I would like to say thank you to investors for your interest in joining this session. Here with me today is our management, Kun Orachon Uyamapan, Senior Vice President from Finance Division, and I am Arada Wichayawanit from PTTEP IR team. I will briefly go through the presentation and at the end we will open the floor for Q&A. First, on PTTEP overview, we are E&P flagship under PTT Group, and our major shareholder is PTT for approximately 64% shareholding, and the rest being institutions and retail investors constitute around 31% and 5% respectively. Our market capitalization is over $15 billion, and our focus area is Southeast Asia and the Middle East, where more than 90% of sales volume are derived from. We operate under a sustainability development framework with three main components, namely the High Performance Organization or HPO, the Governance, Leaks and Compliance or GRC, and lastly, the Stakeholder Value Creation or SVC. These components guide how we operate our business in a sustainable way. On the business strategy that we had announced in the second quarter of last year, first that we aim to be a high performance organization while also strive towards low carbon future. And we have planned to build a sustainable E&P portfolio together with business diversification and several initiatives in greenhouse gas management to achieve the net zero target. And Kun Orachon will elaborate more on our net zero target. Next, on our operations, we have presence in more than 40 projects in 15 countries, with a focus in Thailand, Southeast Asia, and the Middle East. Sales volume from Thai project, which is our home base, accounted for more than 63% with main assets such as Bongkot or G2, Atit S1, and most recently G161 or Erawan project, which we had already completed the transition from previous concessionaire, and now we are the operator of Erawan. In the Southeast Asia, our main investment is in Myanmar and Malaysia, contributing about 25% of PTTEP sales volume, and we have key projects like Satika and Yadana in Myanmar, and a number of exploration and production projects in Malaysia, including the newly discovered Lang Lebah, which we had announced a successful discovery early last year. And the project is planned to deliver its first gas in 2026 with initial capacity of about 800 to 1,000 mmSCFD. In the Middle East, we focus in UAE and Oman, where we partner up with global players like BP, ENI in both producing and exploration projects. Key assets are Oman Block 61 and another 4 exploration blocks in UAE, as well as some midstream LNG business. Apart from these main locations, we also have presence in Africa, namely the LNG project in Mozambique, which is still under development phase, and another 2 oil fields in Algeria and 1 in Angola. Speaking of the book value of our asset by region, the major chunks are absolutely in Thailand, with about 40%, and for the other Southeast Asia for about 26%, and for Africa and the Middle East of 17% and 14% respectively. Next, on our focus areas of 2022. The first priority for this year is that we will ramp up the production capacity of G161 project after we have completed the operatorship transfer. And currently, the production capacity is about 300 to 400 million scalps per day. And due to lack of pre-required investment prior to the PSC start, that we plan that we should be able to get access into the site 2 years prior to the PSC start, but we were not able to get access. Therefore, the production will drop until it reached the bottom of about 250 to 300 million scalps per day in the third quarter of this year. And after that, we will do our best to ramp up the production to reach 800 million scalps per day, which is expected to be achieved by the early of the year 2024. For G261, the operation went smoothly as we were the previous concessionaire of this project. Next, we will focus on asset monetization of the development projects such as Malaysia Lang Lebah or SK410B, which we aim to conclude the development plan and do FEED study in order to FID the project next year. And for the exploration, our drilling campaign for this year is for 21 wells in 4 countries. The majority will be 14 wells in Malaysia, and the remaining will be in the UAE, Mexico, and in Thailand. Next, on the greenhouse gas management and carbon capture storage, we are continuing on the GHG reduction according to plan, and we are under the preparation process for roll out the carbon capture storage at Artit project as the first pilot project of PTTEP. And for net zero, we have already set the target by the year 2050. And the last thing is on the business diversification. We aim to grow the business beyond E&P and to scale up the ARV or AI robotic ventures business, as well as the gas to power that the preparation work is still underway, and the carbon capture utilization project and other renewable and study of hydrogen. Next, on the update of key highlight during the last quarter, on G1 and G2, everything went well according to plan. And for Malaysia, we have been awarded new block from the Malaysia 2021 bid round. The block name is SB412 project, which the PSC was signed in March this year. And next, on Malaysia Lang Lebah or SK410B, we are planning to drill one more exploration well in this year, and to FID the project in 2023. For Myanmar, we had already been appointed as the new operator with increased stake to 37% from the withdrawal of Total, and this will be effective from 20th of July this year. And in UAE, we have acquired the stake in Sharjah Onshore Area C project, which our participating interest is 25%, and the deal was already completed on the 1st of March this year, and we are proceeding for the seismic activity. In Mozambique, our main project is Mozambique LNG, which the operator is Total. And the first cargo is still expected in late 2025, subject to local security situation in Mozambique. And as you might already heard that last year Total had declared the force majeure for this project and removed all operation from out of the site area because of the security situation in the area, and the situation remain unchanged, but we expect that we should be able to get back into the site by the end of this year. And for Algeria, we had already delivered the first oil of Algeria Hassi Baragas project on the 1st of June this year, contributing about 4 kboed for the entire year. Next, on the business update for the business beyond E&P, the first part would be the ARV that we are planning for scale up. This our AI and robotics business. Currently, it has 4 business lines and are now under business scaling up stage. For the next part is the gas to power project, which is a $2 billion project covering upstream gas development, pipeline, and a gas-fired power plant of 600 megawatt, located in the south of Myanmar. And the project is expected for FID in next year and to be COD in 2026. Next, on the carbon capture storage or CCS, as mentioned, PTTEP commits to be a part of resolving global warming crisis, and we foresee that CCS is the crucial part to achieve the greenhouse gas reduction target according to our plan and to move forward net zero. The project scope will be the first 2 pilot projects at Artit and Lang Leba, where the carbon dioxide from the production process will be captured and sequestrated underground in the depleted reservoir. In addition, PTTEP has already signed MOU with INPEX and JGC from Japan to do further feasibility study of other CCS projects in the Gulf of Thailand. And next, we are also pursuing for the first pilot solar energy project under the subsidiary named Future Tech Solar Thailand Company Limited. This project is located near S1 project in the northeastern of Thailand with capacity of 10 megawatt. And all the electricity produced from this solar farm will be 100% off taken for our operation of S1 project. And the objective is to pave the way for further renewable business of PTTEP and to support company net zero target. This solar project is expected to be FID in the middle of this year and to COD in early of next year. And the last part would be the carbon capture utilization and hydrogen. PTTEP is exploring CCU concept to convert CO2 into other high-value products. And most recently, we have signed MOU together with 5 international companies to explore more on the establishment of a green e-methanol pilot plant in Singapore. And the feasibility study will be concluded within this year. And for hydrogen, we foresee this as a future energy possibility and will further study on it. And next, Kun Orachon will walk you through our net zero ambition.
Thank you, Kunalada. The other important event that I would like to mention and express more is our net zero greenhouse gas emission target of 2050. As we aim to be a low carbon entity and commit to reduce the greenhouse gas intensity, with the fact that we have achieved 24% intensity reduction from target of 25% by 2030 from 2012 base year. This will be achieved ahead of plan by 8 years. Therefore, to reflect our commitment to take part in resolving the global warming crisis and support Thailand's net zero target as committed in COP26, we have announced a new target last March during the annual general shareholder meeting to achieve net zero greenhouse gas by 2050, focused on E&P business for Scope 1 and Scope 2 under E&P's operation control. We have also defined the interim targets. The first one is to reduce greenhouse gas emission intensity at least 30% by 2030. And the second is to reduce greenhouse gas emission intensity at least 50% by 2040 from our new base year 2020. And for our pathway to net zero greenhouse gas emission, first of all, I would like to walk you through greenhouse gas management concept. As I mentioned before, we focus on managing greenhouse gas emission from Scope 1, which is direct greenhouse gas emission from our normal operations, and Scope 2, or indirect greenhouse gas emission from the generation of purchased electricity. Currently, we do not cover Scope 3, which is other indirect emission from companies' value chain, such as business travel. However, we do report this number in our SD report. In terms of how we manage, it will be under three frameworks. The first one, avoid, is to avoid greenhouse gas emission from the company's activity. The second, mitigate, is to reduce greenhouse gas emission through projects and initiatives such as flare gas recovery unit and carbon capture utilization storage. And the last one, offset, is to balance remaining emission while offsetting projects such as forestation and carbon credit purchased. In terms of roadmap, we come up with EP Net Zero 2050, where E means the exploring of lower carbon portfolio, and P means production and planet in balance, from technology development and social projects that we contribute to greenhouse gas reduction. Under the avoid, mitigate, offset framework, we have action plan in each element. For example, avoid, we will apply internal carbon price in our evaluation criteria for project investment. Mitigate, we will increase energy consumption efficiency, proceed with our carbon capture storage project in Atit and Langlaba, attempt to achieve zero routine flare, and add renewables energy source in our operations. We have also started to explore future clean energy such as hydrogen. Offset, we will do through forestation together with Blue Carbon Project, which is the carbon stored in coastal and marine ecosystem such as mangrove and sea grasses planting, and also other projects under Ocean for Life. That's all for net zero greenhouse gas emission. Next, Khun Arada will go on with financial result update, please.
Thank you, Khun Orachon. So next, I will go through the financial result of the last quarter or Q1 this year, as well as the financial outlook for the remaining of this year. First, on the net profit Q-on-Q result when compared Q1 this year to Q4 last year. The reported net profit for Q1 slightly declined 1% to stood at about $318 million in the first quarter. And this is due to the fact that we had reported quite a huge amount of oil price hedging losses in the first quarter of about $240 million. And the majority is the unrealized loss from the mark-to-market of the financial instrument. But if we are looking at the net profit from normal operation, it is continue to increase about $60 million Q-on-Q or 10%. And this is on the back of 10% rise in the average selling price and 2% rise in average sales volume, and the unit cost also be lowered by 10% Q-on-Q. And if we are to compare the net profit for Q1 this year to Q1 last year, the net profit seems to decrease about 15% compared to the same period of last year, and this is also as a result of the extra gain that we had reported in last year from the acquisition of Oman Block 61. So last year we had reported the net amount of extraordinary gain of about $94 million, while this year we had reported a huge amount of extraordinary loss from oil price hedging. So actually our profit from normal operation increased by about $290 million, and this is supported by a strong increase in average selling price of 27% year-on-year, and the sales volume also rose by 12% year-on-year. The increase in sales volume is supported by the fact that last year in late of the first quarter, we had completed the acquisition of Oman Block 61. And also in February of 2021 or last year, we had already achieved the first gas of Malaysia Sabah H gas production. So in this year, it will be the full quarter realization of sales volume from these two projects. So if we compare the sales volume year on year, it increased quite significant. And on the average selling price, you might notice that our liquid selling price normally track to the Dubai price, but our gas price is the majority of our gas price was linked to high sulfur fuel oil with a lag time of 6 to 12 months. Therefore, our gas price, when compared Q on Q, might not increase in the same portion to the oil, the market oil price. But we can expect to see the peak gas price for this year in Q4 when the major of projects, the gas sales agreement, the gas price will be adjusted in October of this year. And the unit cost for the first quarter of this year declined approximately $3 per BOE when compared to Q4 last year. And this is mainly from a decline in OPEX and G&A per unit. This is as a result of there was one-time cost actualization, which caused the OPEX and G&A per unit to be high in the fourth quarter last year. And this cost actualization was our usual practice in Q4 of every year. And during Q1 of this year, the budget utilization percentage was still low from less of exploration activities. So this is another reason that caused the unit cost of the first quarter this year to be quite low. And the next, okay, so sorry for the our technical difficulties. So I will continue on to the financial guidance for the remaining quarters of this year and for the full year of 2022. So we expect to see the gas price for the second quarter of this year to be about $6.2 per MMBTU, and for the full year at $6.4 per MMBTU. And this is based on the average Dubai price assumption for the year 2022 at $96 per barrel. And the average sales volume for Q2 and for the entire 2022 is now expected at about 467 kboed. And on the unit cost, we view that the unit cost starting from Q2 will be increased to reflect higher royalty expense per unit according to the fact that the royalty expense for the project in the Gulf of Thailand is based on the sales revenue. And when we have the higher average selling price, the royalty per unit tends to increase, as well as a higher OPEX cost for the first year operation of Era-1 project will cause our unit cost for the remaining quarters of this year to be rather high. But we still expect to maintain our profitability with EBITDA margin in the range of 70 to 75%. And our debt to equity ratio stood at 0.33 times, which is still below our policy of 0.5 times, and the average cost of debt was at 3.4%, with time to maturity average around 12 years. So this is the end of the presentation. And now we will open the floor for Q&A. If you have any question, please feel free to leave it in the chat box or unmute your microphone and ask our management. Thank you.
Okay, the section has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you investors and corporate for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much and have a good day. ขอบคุณนะคะ
ขอบคุณค่ะ
Thank you สวัสดีค่ะ